Hello and welcome to another Ready, Set, Engage. Completely, I guess, new series or whatever. It's 2025, so this will probably be maybe I'll do episode one of 2025, and that way when I go back and look later, like I can kind of figure it out. You have to excuse me. I put a screen up there so I can see what's going on, like what I'm sharing and where the information is. I've got notes here that I'll sort of share in the video, and then I've got notes over here that are, I guess, my talking points or things that I'm going to try not to forget. Uh, but for those who haven't been around to see Ready, Set, Engage, I think the last one I did is like 4 or 5 years ago. The idea is that oftentimes there's media, news, information that's out there, and um, it's not always accurate. Sometimes it's agenda driven. Sometimes it's just so far off. And so Ready, Set, Engage is the idea that when the information's out there, it's one, good to understand the information, but two, like be sort of critical on it. And so a lot of this is me teasing through those ideas to pull apart information, to look at sort of if there's a narrative, what the narrative is, and then how I read what's going on. Um, for today, I wanted to talk about two topics really. The first is Tesla. Tesla's been getting some bad press. I'm not going to talk about the terror attacks. I think those are interesting, but I just don't know enough about those, and they're not really the news cycle that hit me. So instead, it's Tesla sales and sort of how that impacts the company. And then the second topic is return to office. For those who don't know, Amazon's all returning to office, and so that's been a big news cycle. And there was some people saying that they were making a claim that remote work is uh, doing fantastic and great and et cetera. And so, like, as Tesla's been having this day in the news, and RTO has been having this day, I sort of it took it as an opportunity to look at um, performance data and information on those. And so I'll sort of break those down. I made a couple of charts, and when I talk about the charts, mostly like me playing with crowns. They're not like the awesomest, most fantastic charts. Like I didn't spend days making these. They probably took like 10 minutes each, and I'll cite my sources. So we'll start off with Tesla and sort of the news related to Tesla. So I've got here a LinkedIn post. The LinkedIn post is talking about Tesla's performance in 2024, and it says, "Oh, it's grim news for Tesla," right? Um, and so everyone's like, "Oh, crap, Tesla's doing terrible," right? Um, Despite all the things they've been trying to do, their vehicle sales are down to 1.79 million in 2024 compared to 1.81 in 2023, the prior year, right? That's 98.9% of the prior year's sales. That's actually pretty good if you ask me. Like if you were going to forecast a year and you did that well, that's great. Not to mention Tesla has kind of been having some competitive challenges in China with China's it's like BD or something like that, BTD. They've got an EV manufacturer over there that's actually been doing well in the Chinese market, probably a bunch of subsidies, etc. But let's just ignore that for a second. The big thing is grim news, and then here's this Q4 missed deliveries for Q4. They only got 495,000 instead of the 512,000. And so, like, if you just do the math on that, right, that's a 3.2% miss, 3.26% miss on the projections, right? So the actual sales came within 3.26% of their expectations. They like mathematically and like from a business perspective, that seems really good to me. And so it's like, but Jamie, like the projections are off and they're lower and et cetera. Okay, I get it, right? So let's just sort of compare the news cycle. And so hopefully this shows up. This is it's called 1440 News or 1440 Daily News. It's a newsletter, and they claim that they're nonpartisan. And so if you look here, Tesla shares dropped 6%. Yep. Okay. There's the EV competition in China, Europe, and US. And now here, delivered more than 1.7 million electric vehicles in 2024, down from more than 1.8 million in 2023. So, like The reason I jump at this one is because if you average those, it's 1.8 and 1.8, right? 1.79 rounds to 1.8, 1.81 rounds to 1.8. You're really close. But because of what they've done here, they've said more than, and then they dropped it a full million. So it looks like this major gap that's happening when realistically it's not that severe. It's actually pretty close to the sales that they had the prior year, despite the challenges that they've had. Um, and the other part to keep in mind with Tesla is Elon Musk and his association with the incoming presidential administration. A, and the moves in Department of Government Efficiency, or DOGE, that him and Vivek Ramaswamy are going to lead should lead to vast deregulation. Deregulation is part of the reason that Bitcoin's been flying off the charts. It went from like 57,000 before the election to 98,000, I think was the number per $98,000 per Bitcoin was, I believe, the levels that it was at today. But like net, we'll talk about that a little bit more. But I wanted to contrast that, right? And so I guess real quick, and we'll come back to this later as well. January 2nd, you can see the stock price for Tesla actually dropped. And so that article on LinkedIn was from January 2nd. We see a dip in the trade value for Tesla. It was down to 377. I was telling one of my guys at work, like, this is a buy time for Tesla. And then of course today we see it back up here at 410. So if you would have bought yesterday, you would have got 10% back already. And like long term, right? Like the last time they had bad news was around July. And so if we go back to July, it, my guy bought it at 177, I think. So maybe it was June. So last time they had really bad press, I saw a dip. I was like, hey, this is this is a good time to buy. And here's the expectation, right? If you look at it over the year, double, almost triple. And so like Tesla's been doing really well, and the bad press seems to happen and cause little dips, which is fine, a little bit of volatility, but over the long term, like they tend to be doing pretty well. Anyway, let's contrast that, right? So if we look at U.S. auto sales, U.S. auto sales, oh, their best year since 2019. U.S. auto sales are doing great. First of all, there's no mention of Tesla in here. Second, it says GM sold 2.7 million, Ford sold just over 2 million, right? Uh, these are a rise, and so they're doing so great, right? Significant momentum for overall sales. Um, the problem with that is GM just announced recently that they're going to pause their is it the Ram 1500 electric vehicles, and their production won't start until 2025 because they're going to focus on the regular 1500. Ford had a similar announcement where the Ford Lightnings were going to pause production. I think that happened, and they furloughed maybe like 1500 workers or so. That happened in October, November timeframe, and they're not resuming production until middle of next year. You get into sales, though. Remember, we're talking 1.79 million Teslas, electronic vehicles, 1.79 million. Ford has sort of several vehicles, I suppose, that are electric vehicles. The Ford Mach-E was supposed to be the top seller for them. If you look, uh, for 9.5 thousand units for the first 3 months. Somewhere in here was like 1,400 or so for the first 6 months of the year. Oh, maybe this was the earlier thing. So maybe I'm thinking of Ford. Yeah, there you go. 15,000 for the Ford F-150 Lightning. So the Mach-E is supposed to be their number one vehicle. Their number two vehicle is supposed to be the F-150 Lightning. The F-150 Lightning in the first half of the year. Again, these articles were July 19th. Sorry, I didn't spend a ton of time looking to see if they quantified their year end. And we'll talk about fiscal years a little bit when we get into some of the RTO stuff. But basically, like here's a litmus. You can assume that if Mach-E sales kept up, they sold about 40,000 vehicles over the year, and if Lightning picked up, they sold probably 30 to 35. I would assume 35 to 40. Q4 tends to be where vehicle sales get more incentives to try and kick up their sales for the year end. And so Q4 might have actually been a better sales period for both of those vehicles than the prior quarters. And so just on on a guesstimate there. You're talking about 40,000 and 40,000, so 80,000 electric vehicles out of the 2 million that Ford sold. It's really not very good. And other places you can find the estimates for how long these vehicles are sitting on lots. And I believe, oh crap, I'm gonna get it wrong, so I shouldn't even say it. But it's something like the average was like a month, and I feel like for the Lightning, it's closer to like 3 months or something like that, or 140 days. Like it's really sort of creeping up there. So how bad is Tesla really doing? The reality is Tesla's doing pretty well, but let's get into how to quantify that, right? So we're going to take and move past a whole bunch of these, and we're going to move over to the RTO doc that I put together. Real quick, I guess I can put them like this. The RTO doc. So the inflation data comes from macrotrends.net. You can click on that. We'll actually look at that here in a second. And so I took a stake, put it in the sand. I started with 2014. Why did I do 2014? I don't know. It's about 10 years, so it's fucking close enough. Excuse me, I'm trying not to cuss, so you'll have to keep me honest when I cuss too much. Um, 2014, so you see 1.6% increase or interest rate for the annual interest increase or the inflation. Sorry, inflation, not interest. And it's relatively flat. Generally, like I think 2.5% and less or 2% and less is the target for the Federal Reserve. And like, probably shouldn't get into how that whole thing works. But if you take and compound these increases in inflation rate over that period, right? Over this period, a dollar in 2014 equals about $1.30 in today's value, right? And so that's important, one, because like that impacts the valuation of stocks, and two, it's sort of how much money is out in the economy. But also, when you think about how well a company's doing, you need to take that into account, right? Because 2021, 2022, and 2023 had really high inflation rates. This year, 2024, we're tracking right about to a 2.7% interest rate for or increase in inflation for the year, I think is where the numbers are roughly at. We'll see how it settles. But that's sort of what you're looking at is this big growth in inflation, which means like even though the dollar amount might seem high, the valuation might not be so high. And so what might that look like? So we'll go to RTO doc that I put together. So basically, people were saying there's obviously a lot of interest in return to office. Amazon announced that at the beginning of the year there would be a return to office, and so there's been a number of comments online, and I just so happened to see a number of those. One of those comments was remote work does well, and we've been getting net profits or record profits. And so obviously remote work is just as good and obviously better than being in office. So we shouldn't go to office because we've been getting record profits. And so on the charts here, what I've done is I've taken three different metrics, and again, they all come from macro trends. So you can go there. There's a revenue tab. The links here, I'll probably put it in comments. But you can go to the revenue tab, and then next to that is profits. Let me see. We'll just scroll down real quick. So revenue, gross profit, and then net income. And so revenue is like all the money that you pulled in. Gross profit is sort of that plus minus what you take out to pay for the goods that you're selling, I believe. And then net income is like you subtract all of the stuff you spent, whether that's buying product or doing whatever, and also the operating income, right? So like how much it costs to actually run your business, or pay your workers. And so you subtract those out, and then what's left is what you actually make, right? What you actually your net income that you take away. So um, we'll look at this. The bars are the revenue or the metrics that you'll find online, and then what I've done is the line that goes over the top is adjusted delta. So the delta looks at the difference between the year and the prior year, right? And so 2025 versus 2024, you'll see here, this means it's probably like 18 or so billion dollars, and this is in billions, um, billion dollars more than the prior year, right? So this is like a $18 billion delta here. The margins on the right, or the metrics on the right for the line. So this is about 28 million growth, right? But then I've taken and calculated in the inflation. So the total value would actually be higher than what we're seeing for inflation. And why I did that is because if inflation's raising the or sort of lowering the value of the dollar, and thus there's more dollars that are available, then obviously the number is going to go up. But you can't credit that with the performance of the business at that point. Instead, you need to talk about that in the sort of macro economy, right, where the dollar's worth less. And so, yeah, you've got $400 a share or whatever it is. But if you were calculating that back to 2014 dollars, then it's really $300 a share. So anything above that, you can't say, oh, it's because we're doing so awesome. No, like part of that is attributed to inflation. And so my adjusted delta there is trying to take that into account and remove that out. And so then the way that that's calculated is a little different than just showing that um, comparison of one bar to the next, and that's why it might not totally align. But because inflation is 4 to 8% on a given year, I think, or well, obviously 2 to like 8%. 8% was, I believe, the 2022 or 2023. If we go back and look at that, um, then that will adjust obviously where it lands on gain. So 2022 was 8%, huge year of inflation. We spent trillions, which really means we like created a lot of debt and printed a bunch of money. And so when you're talking about that, you need to understand that the value of the dollar went down. And so like if you have a ton more, then it's not necessarily, oh, I'm doing so great. Your buying power actually went down, is the way to think about inflation. So revenue. How's Amazon doing? Amazon over the last 10 years, like you see this steady incline. The problem, or the thing to think about, is with COVID really hit in 2020. You're looking at sort of the growth trajectory. And so it went from a nice curve like this to sort of rounding off, right? And so it's sort of rounding here. And then the other thing you're looking at is that line chart where the adjusted delta, or the billions, right? Hopefully, I don't know if my finger goes this way. I should be going this way anyway. If you're looking at the line chart, basically like it climbs, has a little dip in 2019. Don't know what that is. And then shoots up in 2020. Everyone locked in, everyone's buying a lot of stuff in Amazon. This makes total sense. But the next couple of years sort of round off and actually go down. And so when you're talking about economics, there tends to be this idea of regression to the mean. And so even if you have a really good year or a really bad year, generally you'll go back to your standard gain or your standard line, right? Here we don't see that. Instead, we sort of see it fall off in the tail end, which is kind of not a strong indicator that working remotely has been good for Amazon. And so you can talk about gross profit. Gross profit, again, sort of like what you're making, less the cost of goods sold. And so they're doing all right, but 2022 and 2023 again are a bit lower. And again, adjusted delta, right? And so yeah, so there's that. The charts don't have a zero match on the Y axes. And so on the left, it starts at 0. On the right, you'll see it starts at 10. So obviously there's more to that scale as far as the line chart. But to fit it all concisely, that's kind of what I went with. Then we talk about net income. So net income, same idea, right? You would expect to regress to the mean. And so like if you look at the adjusted delta, it's relatively flat over the years, a slight gain, and you can see it's kind of going from a billion or two, and then it gets up to like 10 billion of net income going into 2020, and then we get to like 11 in 2021, and then this big drop. And that big drop, if you look, the zero index on the y-axis, I guess it's this side of the chart. Sorry, it's inverse. I should have flipped my camera. This side of the chart uh, is is just above zero, but then if your zero is not the flat line along the bottom. So if you get to 2022, there's actually a loss, right? A loss in net income. So Amazon effectively lost money and wrote down money. And then you get to 2023, and so you've got this big delta, right, between the prior year and that year. But if you look at it compared to the trajectory of income over those years, one, it hasn't hit the same sort of growth pattern that it had leading into 2020. And two, like if you think about regressing to the mean, then you would take that high point of 20 billion delta, adjusted delta, which seems really good, but you're including the minus 30. And so if you bring those back towards the mean, then it's still sort of a negative slope. And so it's not a like sky is falling, but it's not a strong indicator that remote work was actually positive for Amazon. Instead, it actually looks like we've been having a rough couple of years. And so, sorry, yes, we've been having a rough couple of years. Sorry, Amazon's been having a rough couple of years. Um, and so that's interesting to see. Let's compare that to somebody else, right? And so if I can figure out where my mouse is at, we'll come back over here and we'll scroll down a little bit. And now we have Microsoft. How's Microsoft doing? Microsoft is quick note here, and we'll see it in the charts. Microsoft shows 2024 data. The reason Microsoft shows 2024 data, and this is a cool artifact, this is why data is so neat to me, is Microsoft's fiscal year actually starts in July, and so it goes July to end of June. And so 2024 has been done for the last 6 months for Microsoft. So obviously they've got all their data in. That's interesting because if you take and you realize that Microsoft is skewed like 6 months before everybody else or before calendar year, then you realize that the Amazon dip in 2022 would wind up showing in 2023 because of that overlap. So fall of 2022 for Amazon is probably when they saw a dip. That's when I think that's when we went into the second lockdown. I don't remember historically, but I believe that's about right. And so 2023 as the fiscal year for Microsoft would actually be in the second half of calendar year 2022. And that's where we see the dip there. And so it's interesting to see that in 2023, not 2022. There again, when you're looking at revenue overall, it's going good, right? A good solid growth pattern with a dip in 2023 to coincide with what we saw for 2022 in Amazon. And then it goes back up. But again, we're looking at regressing to the mean. And so it's not actually back up to that growth pattern we were seeing before when you adjust for inflation. Obviously, if you just look at the blue bars, it's still kind of going up and it's still overall doing all right. I'm sure Microsoft will be fine. The point is that the revenue numbers you're seeing and how they're going up doesn't necessarily account for how inflation is impacting that number or that valuation, like what it would actually be worth if the dollars were kept flat. So because of that loss in valuation, because of the inflation that happened, like the adjusted delta shows a better picture of what's actually happening as far as their performance. Not a super bad thing, just sort of trying to level set that, right? So you go into gross profit, similar sort of idea, like they were doing pretty well. 2023, you have that drop in the delta, even the adjusted delta, and then you can see the gain is actually a lot smaller. Your zero on the axes is off of the bottom of the line on this side, left hand side. Yeah, okay. So like way over on that side of the chart, but overall it's gaining pretty well. And 2024, of course, in fiscal year 2024, Microsoft made its big deal with ChatGPT, and so I think that that's actually fueling quite a bit of that, which is completely fine. When you get to net income, similar sort of idea. Like 2023, it went to basically zero as far as gain or difference between these two. So this is actually at the zero line on the right side of the chart. So the adjusted delta went to zero and now it's starting to climb again. Overall, like if you look at net income, it's been growing over time. That's a positive indicator. There's a lot of volatility, right? And so some years you aren't gaining. 2018 wasn't a gaining year. 2023 wasn't a gaining year. They're basically like, well, 2018 was obviously below the growth. So this is actually a loss in net income growth. Overall, still almost $20 billion in net income. And then as we go all the way to 2023, it went to zero adjusted delta. So it didn't gain any on the prior year, but it was still a $70 billion net income year. So still a very positive year for Microsoft. And so that's what the trend is and what I'm trying to show with the adjusted income. So let's get down to Tesla. So if you look at Tesla's revenue, and adjusted delta, right? Tesla's got a really strong trajectory. This is revenue, so like don't get too excited about this. But you see a fair amount of volatility. 2022 was a fairly heavy year, and their adjusted growth or adjusted delta went to basically zero. So they had a flat going into 2022, and that might be concerning, but I believe 2022 was the year where they dropped the price to be more competitive of their entry-level sedans and several of their sedans, right? And additionally, it's the year that Elon Musk bought Twitter, and so the world freaked out, and everyone thought, oh, what a horrible person, and what's he doing? And he got a really bad amount of press. Tesla took a hit, obviously, but if you look at their revenue over time, it's actually doing quite well. Their adjusted delta is actually keeping a lot closer to that regression to the mean, right? So it's a line. It's got ups and downs, but on average over time, it's staying at that growth pattern. That's the important part about regressing to the mean. So you shouldn't get too excited about being higher or lower. You should be sort of looking for that growth over time. Adjusted profit, right? Adjusted profit, similar sort of idea. So profits going up. 2022 banner year. I think that's when there were a ton of incentives and the price thing, and so profits look like they went up. But they also took and sort of adjusted their model a bit and went more towards full self-drive, open source their technology, et cetera, et cetera. They their year wasn't that amazing. Here at Clips at 2022 and 2023, for some reason they had revenue, they didn't have gross profit. For 2024, I'm sure that'll come out later, probably in an earnings statement. I don't know when they do their earnings call. I don't track all this stuff. Probably February or March, maybe as late as April. Anyway, and so you get to net income. How did they really do? Like how much money was in their pocket at the end of the year? And if you look, before 2019, they were actually negative on net income. So they were losing money up until 2019. And this is the thing about stocks, like you're betting on how they're going to do into the future. But in 2020, they kind of turned that around, get a net profit, and then their net profit has been growing. And so like when you see the adjusted delta, their adjusted delta is like between negative 1 billion, like they went down or lost more that year than the year before. But overall, they've actually been growing, and so you can see that growth. 2023, not as good, but still $2 billion in growth. And so despite sort of the competition from other EV providers or other EV makers coming into the picture, and the competition from China, like overall, Tesla's been doing pretty well. So like that growth pattern, right, is pretty solid, and yeah, it's pretty solid. And then their adjusted delta, so even taking into inflation into account, they're still winding up growing over all those years. So like what does that mean? Like how do you tie all this back to what we talked about before? Well, if I can figure out where my mouse is and we go back to the stock ticker and we look at 5 years or how long is the max? If we look at like 10 years, like 2014, we were way over here. Stock price was like 10, 12, $14. Now we're over here. It's 400 and I think well, it's 410 today. Obviously, it was 420 like last week, and so it's like in the 400s. So their stock price has been absolutely phenomenal. And so like when you see the negative press, Like it's always important to ask, what's going on? Should I be concerned? Should I invest? Like, and yeah, I'm not telling you to invest. Like that's your decision. But when you see that negative press and it seems to be asymmetrically opposed to specific people, right? And in this case, it's Tesla. Sometimes it's well, sometimes it's Amazon. Sometimes it's all sorts of stuff. Um, it's worth taking into account that sometimes these can be almost like hit pieces to drive down stock price, or that will drive down stock price, but it doesn't necessarily indicate how well that company is doing over time. And so basically, net net, don't believe the hype. Instead, sort of do your research, look into what's been going on over time and how that's likely to hold its trend. And I suppose that's the entire point of the Ready, Set, Engage. Like, had some other ideas, maybe teeing up, but I really, it's probably better I don't get into them. So net net, yesterday had Tesla had some bad press. Everyone was like, what was it? Devastating news or grim news or something like that. Grim news for Tesla. Oh my gosh, the world's going to end. Um, because they did 3% worse than last year. It's still selling at 1.8 million electric vehicles, like a huge amount of electric vehicles compared to any other manufacturer. Um, I, I haven't looked at BYD. I think BYD is actually the Chinese company, not BTD or whatever I said before. I think it's BYD, but huge amount of sales on electric vehicles, right? Their projections for Q4 were actually pretty damn close. They within a 3.2% difference or a miss on what their projection was. So their forecast or their projections was pretty damn accurate. Like it's almost like you could take that to the bank. And then when you look at other manufacturers, like they've been putting holds on their electric vehicle production just because they haven't been performing or haven't been selling as much as they would have liked or as well as they would have liked. And so that's the piece to level set with is Tesla is probably doing just fine. And then when we talk about how well remote work has been going over the last several years, like it's important to understand that it's not just about record profit or record revenue because it'll go up over time. And so every year, effectively, as long as you don't um, crap the bed and fall off the edge, will be record setting, right? If you have any growth, then it's going to be a record or above what you had before. Instead, you should look at how that compares and how that computes when you take into account inflation or what's happening with the dollar valuation. Um, and I think I'll leave it there. It's not worth getting into wealth of nation and how inflation causes prices to skyrocket more so than just the 130% uh, or $1.30 equaling a dollar in 2024 dollars or 2014 dollars, excuse me. Um, I was going to get into Wealth of Nations by, it was Adam Smith. It's like a 200-year-old book and still explains what we're seeing as far as prices you pay and consumer price index, etc. We'll ignore it. We'll skip over that. Anyway, Ready, Set, Engage, episode one for 2025. Uh, Excited to be doing it again. We'll see if I keep up with it. Hopefully I do. And I'm still trying to figure out on where I'll post it. I'm guessing YouTube and then link to Facebook because like both platforms have a sometimes remove content or make it harder to surface or see. So still figuring that out. Oh, and uh, quick tip on Facebook. I don't have Facebook open. I don't want to show it because I don't know whose posts will be there. But on Facebook, one of the things I've been seeing lately is when I scroll, I see a bunch of crap that has nothing to do with anybody that I know, right? There's an algorithm. The algorithm basically goes something like this. It's like if you looked at something for long periods of time, then it means Facebook is likely to capture your attention, and attention equals how much they can monetize. So I can sell advertising because Jamie looked at Facebook for 30 minutes in one sitting, and so whatever content I showed, I want to show him more of. If you like something, it's a strong indicator. Hey, you want to see more of that, and so Facebook imputes that or puts that into the algorithm. And then that makes it more likely that you'll see stuff. And so I've been seeing a lot of car stuff. I've been seeing a lot of like UFC and fight stuff. I've been seeing well, a lot of bushcraft and outdoor stuff. So stuff that I like. But the problem with that is they've decided that seeing that stuff is more important than seeing posts from people that I actually am friends with and have known over time. And believe it or not, I want to see what you guys are up to, what you're doing. And so today I've been retraining the algorithm for me, and I sort of recommend other people do that same. So the quick bonus is the way it works is sort of impressions, duration, and then behavior. And so the impressions are sort of like whether or not you looked at stuff, and how many impressions stuff gets impacts how much they can monetize. The duration is how long you looked at that thing. And so if it's a text blurb, like if you spend a lot of time on that page or on that area reading it, then it's calculating that as engagement. And then the third piece is hitting like. And so if you want to retrain your algorithm or try and get your algorithm back to a good balance between shit you might be interested in seeing and stuff that your friends or people on your friends list are posting, then what I recommend you doing is as you're going through and you see posts from your friends, go ahead and hit like. I've been going through, and anything with pictures, anything with smiles, anything with happiness or talking about holiday spirit, I've been hitting like on. And that's starting to cause more of that to load back in. So I think I'm at like a 60-40 on stuff from other people and 40% on just random crap that Facebook's feeding me. If you want to adjust your algorithm, then I recommend doing the same, and you'll probably have to upkeep it over time just because of one, the way the monetization or the algorithm works so that Facebook can make advertising money off of what you're doing. And two, because of like how we're stimulated by the content that's there. And so like Facebook continues to try and find stuff that's more interesting or stimulating so that you spend more time looking at it so they can make more money. And unfortunately, that means it'll naturally sort of try and drift away from content that your friends are posting because they're not going for the highest possible number of likes and the greatest possible content or monetization. And so just something to be aware of, a way to sort of not game the system, or game um, how they build the algorithm, but a sort of quick understanding or quick reflection on how that algorithm is set up, why it's trying to keep you from um, seeing content from your friends. And with that, I think I covered everything in my notes, plus some extra, um, eh, and we'll leave it at that. So, episode one, Ready, Set, Engage 2025. Be critical as you're reading the news. Look for multiple sources and try and like sanity check if like the emotionally charged words that are being used really sort of bear out in the data or information that you're seeing. That's sort of the key takeaways. Thanks so much for watching, and assuming anybody watches this at all, I'll see you in the next episode. Have a great day. Thanks for listening.